Markets end in the green, but off the day's high. The Nifty ends above 25,000. Banking heavyweights see profit booking. Mid-caps outperform the blue chips.
IndusInd Bank CEO Rajiv Anand says it will take 3 years to regain lost ground after the disclosure of accounting lapses. Adds building trust is top of his agenda. Rules out any capital requirement this year. That's a CNBC-TV18 exclusive.
LG Electronics 11,600 crore IPO hits the street after marquee investors plow in nearly 3,500 crores as anchor investors. The company is betting on higher penetration and premiumization to drive growth.
A bunch of second quarter updates continue. Metropolis gains after its second quarter business update points to strong growth. Trent takes a knock after it misses growth guidance by a wide margin, but Dabur gains after it expects revenue to grow in mid-single digits, much above all the other peers. Hello, good evening. You're watching us here on Markets Forward, a show where we recap the trade today and at the same time tell you about how to prepare for trade tomorrow. I'm Mangalam Malu, with me Ekta Batra. It's been a very interesting day of trade today. The Nifty consolidated, it moved higher, and thereafter, after a bit of jostle between both the bulls and the bears, we saw about a 30-point higher uptick just around that 25,100 mark. The intraday chart of the Nifty tells you the story of the day. Opened lower, moved higher, went lower, moved higher, and ended lower as well. All in all, a 30-point gain for the frontline index.
Yes, absolutely. So struggled a bit towards the end of trade for today's trading session. So the Nifty, however, did close in the green off the day's high, but above 25,100. In fact, the gains were for the fourth straight day, but the market breadth did favor the declining stocks. So that was something that one needed to probably watch out for in the next couple of trading sessions. But yes, we've got you covered for the next 20 minutes with all the big news and the key developments on the Lal Street, top corporate voices and events to track. Let's kick off the day with the market action, and let's also tell you about what we've lined up in store for you. We'll start with the top movers and shakers of the day with Hormuz Vatakia. Trend continues to witness a dip after its Q2 update, while Dabur gains. Metropolis also gained after its Q2 update and points to strong growth. Last but not least, we delve into the market events to watch out for in tomorrow's trading session. But let's get to our first segment of the day. Hormuz joins in from the big wall with all of the top movers and shakers. Hormuz, over to you.
You know, the last 10 minutes saw the railway stocks doing a bit of an up move today. The stocks ending anywhere between 5 to 7% higher after the cabinet approving 4 new projects. But the group that has been in the spotlight all through the day and yesterday as well has been the Tata Group. And Tata Investment seeing some bit of profit booking now, 7.5% lower today. Tata Motors, Tata Consumer also ending the day with losses of up to 2% in today's session. Realty stocks, some of them at least, were on the higher end today. It was a mixed picture for the index. Anantraj ending with gains of around 4.5%. Brigade, Lodha, all of them seeing gains of anywhere between 2.5 to 3.5%. The index that has kept or has ensured that the Nifty keeps its head above water has been the banking index, the Nifty Bank. And even today, we saw the heavyweight banks, ICICI, HDFC, still ending the session with gains, albeit off the highs of the day. Federal Bank did well though, ending with gains of around 3%. A lot of small cap movers saw double-digit moves on very strong volumes in today's session. Indraprastha Medical was up 20%. Uniparts also seeing gains of 10 to 12%, but cooled off slightly towards the close. And RHI Magnecita also seeing double-digit moves in today's session. But a lot of the high-flying movers from last week witnessing some profit booking today. KIOCL after a 50% rally in the last 3 sessions with 10% circuit today. Sandur Manganese ending over 7% lower, and Orient Technologies too after 2 successive 20% moves, ending the day lower by 6%. Back to you guys.
All right, Hormuz, thanks a lot for that. So those are a bunch of movers and shakers in today's trading session. Let's welcome our guest, Jay Bala, CashTheChaos.com, the CMT there, and Sudeep Bandyopadhyay, who is the group chairman at IndiTrade Capital, join us. Thanks a lot, gentlemen, for joining in. Jay, we were speaking to you about where the Nifty is likely to go from here on, and your view on a lot of stocks. Let's ask Sudeep as well. Sudeep, towards the end of trade, we saw these railway stocks move higher. Do you think there's still some traction left here, given the regulatory announcements with regards to perhaps at some point in time the government giving some more orders, etc.?
Well, Mangalam, I think the stocks get excited whenever there are new orders coming. And that's pretty much what is happening today also. what was happening today also. I fundamentally, from a long-term perspective, most of these stocks do look good. But remember, the valuation is not cheap. So one has to be very, very selective when you are buying some of these stocks. And also keep in mind that if you are getting in now, you're getting in from a long-term perspective. Don't expect some miracle to happen within a short or medium term. Out of the stocks, I do like Titagarh Wagons. I think this is a company which has transformed itself from a wagon manufacturer to a metro coach and metro system manufacturer. And the transition has been pretty smartly done. The valuation also is not cheap, but still, I think from a long-term perspective, it does look good. And we have been recommending a buy in Titagarh Rail for some time.
All right, a buy in Titagarh Rail for some time. Let's talk about a couple of other stocks which were on our radar today. Trent continued to fall. Yesterday, remember here on the show, we did speak about how the second quarter update was fairly weak, and today as well was among the top Nifty losers. We also had Dabur, which came out with its second quarter update. So let's talk about Trent first. Trent, the revenues grew 17%, much lower than first quarter growth of 20%. The first half this year, the growth is around 19%. Which implies that, the second half of this year, where a lot of the heavy lifting will have to be done for the company to get to its promised 25% revenue growth CAGR. All of this, despite a 40% downtick from its 52-week high, the stock trading at around 80 times, does not leave much room on valuations as well, and which is why we had some of the brokerages who pared their estimates lower and the target price lower as well. Morgan Stanley, for one, holds their overweight call, but has reduced the target to sub 5,900 rupees. On the other hand, a good update coming in from Dabur, though the stock came in with some profit booking, as we saw with all these FMCG names towards the end. Consolidated revenue growth to be in mid-single digits, operating profit to grow in line with the revenues, which means that there won't be any margin compression. In fact, they believe that revenue growth will only regain momentum in the coming quarters. So even the commentary was fairly positive. Why is that? Because, the GST rates, which have been rationalized, has done well for the company. 85% of their sales now is at a 5% rate, which is a positive. And even if you look at the internals, barring beverages, which was understandably impacted by, unseasonal rains and heavy floods, you had all the other segments which did well. Oral care, double digit. Skin care, high single digit. Hair oils, mid single digit. Remember, the category is not growing as fast. And healthcare, double digit, underpinned by good volume growth as well. So the stock move does not reflect the underlying strength in the second quarter update. So it'll be very interesting to see if brokerages upgrade that stock and we see an up move on Dabur tomorrow or not. But one of the stocks that gained on the back of good quarterly updates during the day itself, we had Metropolis. Ekta, higher by about 2%.
Yes, absolutely. So higher by around 2% for Metropolis. They have said that they have reported a 23% consolidated revenue growth. That was led by the performance of their preventive health check business, True Health, as well as their wellness offerings. Growth came despite lower incidence of seasonal illnesses like dengue and malaria. Core diagnostics improved to high single-digit margins in Q2 from break-even in Q4. And they have indicated that consolidated margins remain strong. True Health, which is the preventive health and specialty segments, grew 25% as well as 36% respectively. So both those segments did well. B2C was up 16%. B2B was up 34%. Company remains debt-free and a net cash surplus of around 55 odd crores. But Indraprastha Gas, or IGL, saw nearly 6% in today's trading session following changes in tax implications on gas sourced from Gujarat. Sonal is here with more details on this. Sonal.
Thank you so much for that. Well, there's a tax cut which has come by. Now, remember, these companies, the city gas distribution companies, they pay VAT on sourcing of gas, be it LNG or APM gas. The news now is that there has been a cut in taxes. Earlier, there was a 15% tax in terms of VAT from any sourcing that came in from Gujarat in terms of gas. Now, it has been cut to 2% in terms of central sales tax. So, there's a 13% cut that has come by. It was in talks. There have been talks about cutting this tax and taking it to sales tax. But GAIL was not agreeing to these terms earlier, but now it has come by, something that the company had indicated earlier as well. Now it's a positive, right? 13% cut in your sourcing costs, and that is why IGL tends to benefit a lot, because they source around 3.5 to 4 SCMD of APM gas coming in from Gujarat itself. This would mean, according to analysts, that there is a 20% EBITDA benefit that the company will get, which is around 1 rupees per SCM on their EBITDA overall. Equirus says that IGL's EBITDA will be up by 20% because of this. The cost cost savings will be to the tune of 360 crore rupees. Now they can either pass it on to the customers or utilize some of it because of higher gas costs and currency depreciation as well. But yes, it will be positive for their P&L, and that is the reason IGL tends to benefit the most and the stock is higher in trade.
Indeed, the stock higher by almost 6%. Jay, any chart checks that you have on names like IGL and MGL? And also at the same time, do you have a chart check on Trent? Because the stock, same time last October was 8,300 rupees, now 4,700 rupees.
Yeah, see, most of the gas stocks, they are either middling or they are going sideways. There's nothing much attractive. So basically, they might do something interesting in the short term, but that won't be a sustainable trend in the medium term. When it comes to FMCG names, that's one sector that I've been quite very cautious on. And Trent, despite its fall from record highs to about 4,000, mid 4,000 odds, it still has got one more leg down below the September low. So once that's done, probably somewhere around slightly below 4,000 odd levels, possibly, then Trent has possibility of bottoming out. But as a sector, I'm still quite cautious on the FMCG space. So I would avoid that sector, but wait for bottoming signs to emerge before committing to that sector.
Okay, all right. Well, let's head on to a CNBC-TV18 exclusive now. We learned from sources that market regulator SEBI has received a large number of representations with respect to weekly options. Yash Jain is here with details on this story. Yash, go ahead.
Well, that's correct. What we've been given to understand is that market regulator SEBI has received several representations, suggestions which have come in the form of email, letters, when it comes to, the issue of whether to do away with or keeping the weekly options expiry. What we are given to understand is that the large part of these suggestions or representations have come from brokers seeking continuation of weekly options expiry. Also, separately, what we've been given to understand is that exchanges are likely to echo a broker's voice in seeking continuation of the weekly expiry as and when they get consulted in the process by market regulator SEBI on this particular topic. What we've been given to understand from our sources on the other end, that is SEBI's end, is that market regulator SEBI is in no rush to bring out a consultation paper or for that matter take a decision and will vet all these suggestions, each and every suggestion in a very calibrated way, in a very detailed way, before a decision is taken. Finally, SEBI sources tell us, and this was similarly echoed by SEBI chairman as well, that currently market regulator SEBI is in the mode of collecting data and studying data around options, around derivatives, and once that happens, only then the process of consultation, official consultation would begin. It hasn't started as of yet. So that's an important update as far as how the responses have started flowing in even before the official consultation process begins on whether to do away or keep the options expiry, weekly options expiry.
Take that point, Yash. Thank you so much for that. We'll obviously monitor this situation as we get some more clarity on this. Weekly options expiry continues. That's positive for capital markets or capital market plays. And if it does not, it's negative for both the exchanges and the brokers. That's the binary trade that the street would be looking at. But let's go back to some of those updates that came by and some of the stock movers. Sudeep, Divi's Labs, that was the top Nifty gainer today. Do you like this stock? And even your view on Trent after it having corrected so much, do you believe the growth rate has bottomed out after being at an 18-quarter low?
Well, as far as Divi's is concerned, I think the company has been doing pretty well. The forecast is also good. And at least the current US tariff, whatever has been disclosed, doesn't affect Divi's much. So I think, things are decent. And at this stage, there are uncertainties around future tariffs and future issues, but things are pretty stable now. As far as Trent is concerned, I've been extremely cautious for a very long time, Mangalam, and I will maintain my view. Look, you are trading at a multiple of 60, 70, 80, and you are showing a growth of 17%. I think there is bound to be a problem. You don't have a margin of error when you are trading at that kind of a multiple. The projection or the forecast is also 25% growth. So I don't see the valuation getting justified with the kind of growth which is being talked about. Of course, that's also not being achieved. So there are challenges. Also, remember the model Zudio, which actually propelled Trent to a different level, has been copied, for lack of better word, I would say, across the industry. And there is too much of competition. There is online competition as well. So I think while Trent is a fantastic company, they're doing pretty well, and 17% growth is not a bad growth under the circumstances. But the mojo which they had earlier, which was giving them the kind of multiple which we had seen, I think that's missing now. And they have to get back that mojo before we can consider those kind of multiples. So definitely I will not recommend a buy in Trent even after these corrections.
Okay, all right. Well, Jay, one stock which stood out today was Vodafone Idea. It's at an 8-month high. What's your sense in terms of the technicals? Does it interest you?
It does interest me, but on the negative side. I think it's a long-term downtrend, and I don't think the low that we saw in 2020 is the final low. I might be too bearish about it. But even if that was the bottom, I would at least expect the stock to reach somewhere about 4.5 levels. In the very short term, I was anticipating it to bounce to somewhere close to 10.25, 10.5, and then resume the lower move. Whether or not it goes back to the all-time low, or whether or not it bottoms at a higher level at 5, but definitely one more lower low is possible for it. Well, we can come to the correct conclusion once the next leg of the decline begins.
Take that point, Jay. Sudeep, thank you so much for joining in with your insights on a lot of stocks. With that, we'll take a short break on this show. Take a break, come back, and we'll talk about the corporate voices along with the key market events to watch out for on the other side. Keep it with Markets Forward on CNBC-TV18.
Welcome back. Well, on to some big corporate voices of the day. IndusInd Bank CEO Rajiv Anand said that it would take 3 years to regain lost ground after the disclosure of accounting lapses. He added that rebuilding trust was on top of his agenda. In an exclusive conversation with CNBC-TV18's Ritu Singh, he ruled out any capital requirement for this year.
4 key priorities. One, like rightly said, build the trust back with regulators, with investors, with depositors, and most important, our employees as well. 2 is get the business momentum back. I think it's a bit slow at this point in time. We put out our balance sheet numbers a couple of days ago. 3 is start to build a profitable franchise which is a lot more balanced both on the liabilities and asset side. And finally, we are here at the Global FinTech Fest. I think there is so much of work that we can potentially do to unlock productivity for the bank, and I'm in a sense here to learn of what we can use from the Global FinTech Fest in IndusInd Bank. We've done some work around this, particularly around our gems and jewelry business. We are quite comfortable in terms of the exposures that we are currently carrying. It is to better rated corporates, within, or the market leaders, within that space. Secondly, on MFI, I think the general commentary is that the second half of the year will certainly be much better than where we are today, and that should play positively for us.
The LG Electronics 11,600 crore rupee IPO to hit the streets. Speaking to CNBC-TV18, the company said that it was betting on higher penetration and premiumization to drive growth. Hear him out.
Premium product production will open the door of exporting to other developed nations, because there the usage pattern of products are similar, is a bit different than what we are selling in India. Apart from this, our export will be complemented by our robust domestic demand also, and it will reduce the fixed cost burden on our pressure on our production, and our export is marginally profitable business as compared to our domestic sale.
All right, and in other big corporate voices, J&K Bank's management is bullish about loan growth and expects it to grow by 12% this financial year. The bank has also said that its retail book showed growth despite challenges in J&K, and growth expectations initially set for Q3 were already met in Q2. The management is now focused on driving better loan growth in the rest of its India portfolio and is confident of maintaining margins above 3.6%.
All right, next up, Bikaji Foods Management tells CNBC-TV18 that while there were some disruptions affected by that affected the company in the last 10 days of September, they still expect to deliver double-digit revenue growth and high single-digit volume growth in the second quarter. They believe that the third quarter, which is the festive season, will be good after the GST-related rate cuts have been affected.
Lastly, InVentures Knowledge Solutions noted that US healthcare spending at 20% of GDP was unsustainable. It also expects Medicaid reimbursements to decline due to Trump-era cuts. However, the company emphasized its minimal exposure to Medicaid-related revenue with no immediate consumer impact anticipated. The company views overall healthcare cuts as a tailwind and expects market growth to exceed 12%.
All right, and before we wrap, we will bring you some key events to watch out for in trade tomorrow. Riya Bhatia standing by the wall for all those key events.
Well, yes, lots of stuff to watch out for. Starting off with the US, we have the crude oil inventories as well as the Fed minutes to keep an eye out on. On the other hand, Chinese markets will remain closed tomorrow for a national holiday. Back home in India, watch out for the board meetings of Adani Enterprises as well as IRB InvIT Fund, which will be considering fundraisers for their companies. Also watch out for the NCLT final hearing for the Vedanta demerger. In other news, Prime Minister Modi will be visiting Mumbai to inaugurate the Navi Mumbai airport. UK Prime Minister Starmer will also visit India from the 8th and between the 8th and 9th of October. The India-EU 14th round of FTA negotiations will also continue in Brussels between the 6th to the 10th of October. And lastly, also watch out for the World Bank IMF annual meeting curtain raiser.
All right, Riya, thanks a lot for that. Those are a bunch of events that we will be watching out for tomorrow. With that, from Ekta, me, the entire team, thank you so much for watching. Stay tuned to CNBC TV 18. All the news and updates follow after this short break.